Hey everyone, it's Keri TV. Did you know that you can buy a property in Los Angeles with less than 20% down? Stay tuned. Now, I'm always trying to stay in tune with what's happening on the consumer side of things. Of course, being a real estate agent and working with real estate agents all day, we're talking a lot about things on our side of the transaction. But recently I found out that 49% of renters or non-homeowners did not know that you could buy a home with less than 20% down. So a lot of people that have been saving to get every single penny to get to that 20% down mark could have been in a property a year, 2, 3 years ago. So I feel very compelled to share this information today for anybody who does not know, because 49% of renters even watching this don't know that. And then really quickly, I wanted to really thank everybody who is a part of making these Keri TVs, the people that help me edit them, put them up, help with content, the people that have been on the show. It really means a lot. I'm very passionate about making sure that we get these out every week, and I wouldn't be able to do that without an awesome team. You know who you are. So let's get into this week's episode. So one of the best ways to get into a property in a market that is potentially rising in price or with interest rates rising is to look at other loan options that are not 20% down. Now there's 3 types of those loan options. The 3% down, 5% down, and 10% down. Many people do not know about these options, which was really surprising to me, and that's why I'm sharing. But due to interest rates, it is now more affordable. It's actually 28% less expensive to buy a home today than it was in 2006 during the recession. The average mortgage payment was $1,275 in 2006. Today, in 2019, the average payment is $963. It's about $300 difference and 28% less expensive. And it's all to do with interest rates. So take a look and make sure you're informed about rates and how it impacts you and loan options. So I want to get into these 3 loan options today. And then of course, keep in mind, I'm a real estate agent. I'm not a mortgage professional. So I'm grateful for the people I work with. Jason Vanderpoort, love you, for giving me this information to share with you guys today. And any questions that you have, I would always point them in that direction. So the first option is the 3% down. Yes, you can buy a property with 3% down. This is one you really want to get ready ahead of time and look at all the loan options and see where and when you can do that. These have mortgage insurance, some don't have mortgage insurance, but they have more limitations on them and the rates are definitely a little bit higher. So that's one to be prepared at least a month, 2, 3 months, 6 months ahead of the time. Now the 5%, you can do 5% down up to 1.5 million. That is awesome. And some of these loans don't have mortgage insurance, some do. Mortgage insurance is an insurance you pay on loans less than 20% down, which adds to your monthly mortgage. Now what's nice about these is that the difference between 5% and 20% on a $1 million purchase is $50,000 to $200,000. That's a huge amount of money that you're waiting to save when you could get into a property. Now the rates for these, I'm told, vary between 5.6 to 6.1, which is a little bit higher than what you're paying on a 20% down. But a lot of times to get that down payment, you're relying on family, most often family, gifts of some kind, and not everybody has that luxury. It's a very nice luxury, but not everybody has that. So instead of paying off your landlord's investment and paying their mortgage, you could in fact get into something sooner and start to build your equity and wealth as a homeowner. Now, the 10% down loans, with the 10% down loan, you can go up to $3 million. Yes, how awesome is that? So you can buy an awesome condo or a house on the west side up to $3 million with 10% down. That is one of the most incredible facts for homeowners out there. And I'm sure if you're watching this and you didn't know that, you're gonna be calling me to buy a house or calling your real estate agent. We're starting to look. What's cool about these 10% down loans is that it's not just if you have only 10%. We find that even our clients with 20% down, they like to use these 10% down options because they save the other 10% for remodeling, for a safety net. Maybe they don't want to put their entire savings into a property. So they can use it as a safety net, a cushion, or they can do painting, flooring, update the kitchen, bathrooms, you know the drill. Go on a nice vacation, the Bahamas. Wait, that's just what I like to do with my others, with my money. So, okay, that's all well and great, Keri, but what does this mean for me? How does this really break down? Well, let's look at $1 million purchase. So if you're buying $1 million property and you're putting 10% down, then your monthly payment would be about $39.35 with a rate of 4.25%. And this doesn't include your taxes and insurance. Okay, so now if you're buying $1 million property with 20% down, which is $200,000, your monthly payment would be $47.62 without taxes and insurance. So that's an $800 difference a month between 10% and 20% down on $1 million purchase. Holy cow. It would take you 10 years with that monthly amount to save up enough money to put 20% down. What could you be doing in 10 years? And you know, if you're a past client of mine watching this and you've bought and sold, most people buy and sell between 5, 7, and now it's 7 and 10 because inventory's been low. So the likelihood that you're going to be using that equity and buying something else or refinancing in that time is huge. So the amount of time you're taking and waiting and saving, you can actually already be in a home and be a happy homeowner. How cool is that? You know, some people are comfortable with it, some people aren't, but we know that buying a home is one of the best investments you could possibly make for so many reasons. So no matter what loan option you're doing, it's always important to work with your specialist ahead of time. Get a game plan. I always have people come to me like, oh, I'm not ready, I'm looking in a few months. I'm like, perfect, sit your butt down. We got stuff to talk about. Let's talk about your monthly payment, what you want to be saving, any credit cards we need to clean up, etc., etc. Because there's so many deadly sins we say when you're getting a mortgage. It's the most important part of the process, besides actually the house shopping side. So I hope that was helpful today. It was definitely a shock to me to learn about this with buyers, not all buyers knowing about these options and the amount of renters that could already be in a home. How cool would that be? So of course, line up your specialist, be informed, know about all these different options, because what you don't know, and it could hurt you. So stay tuned next week for Keri TV. Again, thank you everyone that helps put this together and everyone that tunes in. So I really love being able to give back and inform people, whether they're working with me or not. It really means a lot to me. So cheers guys, and we'll see you next week.